Hello everyone, I'm Dr. Stock, and in this video we're talking about the FOMC meeting details coming up today at 2 p.m., followed by Jerome Powell's speech at 2:30, and then we'll also take a look at the impact that that can have on the S&P and on the NASDAQ, and I think they're both incredibly worth looking at right now, depending on if we get a strong green day or a strong red day. Either way, I believe that it's going to be volatile. While I have you here, take a look down in the description for this link for Moomoo. By signing up and making your deposit, you can get up to 17 free stocks. And the deposits start at just $100 or more. You get 7 free stocks, 2 AI draws, and 5 other stocks valued up to $2,000. $1,000 or more gets you 17 free stocks. So it's still your money plus free stocks on top of it, 2 AI draws, 15 stocks valued up to $2,000. That link is down in the description of this video. It is available through my channel. Also, one other thing, while you're down in the description, find that link for the Patreon. By clicking the link and signing up, you get access to my Patreon exclusive content and my private Discord community that I have over there as well. Take advantage of that opportunity down in the description of this video. That said, let's move right into the content. All right, so for the FOMC itself, I think there's two main things that we had to pay attention to. One of those things is GDP. We want to watch that figure as it comes out on the Summary of Economic Projections to see if they anticipate this year to be stronger or slower than expected, and then what impact that has across 2024, 2025, and we want to see how they see that curve moving for that. So that also means the graphs that they put along with it. I will go over all of that when the new Summary of Economic Projections comes out, including the other thing that we want to pay attention to is the dot plot. So how they see the Fed funds rate going for the rest of 2023 and then also into 2024, 2025 to see how that curve has changed from December until now to see if they expect their rate to be higher or lower or about the same as what it was. I think that those are very important for us to watch. So GDP and how the Fed funds rate is going to go across time in the Summary of Economic Projections. Now, for the markets themselves, here I got Moomoo open for you, and what we're looking at is the SPY, which tracks the S&P, and these drawings on here are all what I had in my previous videos, so there we go. This line right here, the diagonal one, I said is going to be resistance for us, although I said it would be weak resistance. I said we had the 50-day to catch on to, and actually we did. That's where we closed, is right at the 50-day simple moving average. Just beyond that is that 400 mark, which equates about to the 4,000 mark for the S&P. And I believe yesterday we came up and gave it a little bit of a smooch, be like, hey there, 4,000, I'm coming for you. So if we get good news coming from the Fed, that we see stronger GDP numbers with a lower federal funds rate, unemployment staying nice and tight, these would all be good things for markets, along with that 25 basis point hike, which I believe that we're going to get with that meeting. So with that sort of strength, I think we blast through the 4,000 mark. And let's see with our crosshairs on here. So 407. Easily a 2% day. Honestly, if we get a really good report, I think there's been a lot weighing on the markets, and you can see where we were before the banking crisis. We're down around that 50-day, taking a little bit of a rester, and I think it is possible that we might even come back with a strong enough day, a 3% day in the S&P with strong enough news. So that would take a low federal funds rate coming through with the 25 basis point hike and strong GDP numbers, unemployment also being low, so they would see strong GDP, good unemployment numbers, so a tight labor market persisting, also inflation being lower. It's also something that would be helpful for us. So that would be the sunshine and rainbows case. I could see us putting on that 3%. A 4% day would be, 3% is really super incredible. So 2 to 3%, I'll actually give that range first. So 2 to 3% in the S&P, according to the SPY that we have here, I think would be the best case scenario that we had. The ultra sunshine and rainbows version of that, it would be that we would come back and retest this previous high that we had. So that would be about a 4% day, and that would be probably the best news possible to reach us up to that point. And if we retest that previous high that quickly, most likely we would have a strong enough momentum to push up through it, which would be super bullish for us. Looking out from here, because that is the most recent high that we've had. And then the next one is the last peak that we had. We broke this peak here in our most recent downtrend. So I'm not going to go too much in technicals for this one, but you can see the trend that we had. And then this was an important time because it broke that previous peak that we had. That was our first higher high in the entire time throughout the whole sell-off of 2022. This would be knocking out that next one, and that would be really super strong for markets to see that come through. I don't think that's a single day type of thing. And again, that is the sunshine and rainbows case, the most glorious case that we could have, the best summary of economic projections that we could hope for, I think pushes us up that way. So now on the downside of that, so if we get lower GDP numbers, that we are showing signs of recession in there, that we see a loosened labor market, that unemployment goes higher, inflation is showing higher than we want or higher than they thought in December, which could most definitely happen for us. Fed funds rate ends up staying high according to what it says, not only for finishing out 2023, but also 2024, and then settling a little bit more by 2025. Those sort of things I think would push us back down or give us not as much pressure. And so then we come back down. 392 is about 2% down. And then we have the 200-day, which is at 389. So we could have a 2 to 3% down day easily. I think today is going to be volatile. I find it hard to believe that we're going to settle near where we closed yesterday in the markets. So I think it's going to be exciting to watch, especially if you like volatility. I still do have my position in SQQQ, and then I also start a position in an SPXU. So that goes along with the Q1 earnings, and expecting to hear not so stellar things coming out of that. We'll see if I'm right as that comes out. So I am holding out through March into April to hear what they have to say. If we retest this previous high, by the way, and we fail to break it, and we start trailing off, that could be a double top resist for us. Another nice little M shape, and that is a bearish signal for us as per technical indicators. And so that could be a sign of further sell-off. So if we do make it to this top and we are bullish on the markets, then, well, we want to see us break through it on good volume and have a day where we would close above it as well. Let's move on to the Qs here. This one I think is pretty exciting. So in the NASDAQ 100, which is what the Qs track, again, trend lines that I had drawn before. So I said this diagonal line that we had here for resistance would be fairly weak resistance and most likely would break through it, and we did. And then I also had a line drawn at 309, and we actually closed at 310. We peekabooed just above it, and you can see the volume isn't great. The momentum is still looking stellar, though, as per the RSI, which you might not be able to see. Let me move it over this way so I'm not blocking it. Right there at 65. So we're still not in overbought territory. So this movement that we had, I thought that we wouldn't necessarily be done, and yesterday was a decent day in the markets. We don't have that far up to go. We have about 1% to go to get up to our previous peak. Let me zoom out so you can see that better. So this peak, just like in the SPY, was significant for us because this one back here was the last peak of our downtrend throughout 2022. This one broke that and gave us hope that this wasn't only just a bear market rally, but that it was the start of the next bull run. We need to break above that in order to keep that story going. If we do break above 313, our next thing to tackle is this, I believe, 330. Revisiting that and breaking that would be absolutely enormous for bullish behavior in the markets. So that's something that we want to watch for because after that, I mean, the sky's the limit. We do have a little bit more. I don't have all the resistance lines drawn on here. I think it will be, since we're only about 1% away from that one. There we go. I think this is the next area of resist that we have, and that shows up a few times that we have throughout here. We had a little bit of stumbling around it here and there, and then let me zoom out a little bit more. You can see more of it back here. In the markets, as we reached across these previous peaks, we stumbled around there with it, and then also more stumbling here, finding a little bit of support. So that one, also stumbling here as well. That resistance line is at about 319. So if 313 is where this one's at, 319 is where that's at, that's 3%. And if we get that strong, like sunshine and rainbows case, hitting that 316, well, breaking 313 is going to be incredible. If we break 313 on good volume, then we don't have a lot stopping us, getting us up to 316. That would be breaking this most recent downtrend, and also it would push us up towards getting even closer to that 330 mark, which breaking 330 would be incredible. So again, that's the bullish case. That's on the way up, and 313 is all it takes. 1% more to break what we had there, and then we have room for another 2% after that. And that's that we get super awesome good news coming out of the Fed today with their summer of economic projections and through what Jerome Powell says. And that also, again, banking woes aside for all of that. So sunshine and rainbows would also be that the banking sector is healthy, and that the market believes that the banking sector is healthy, and that there's not going to be any more problems, any more fallout from that. So that's best case scenario that we see that go up. Now, if we do happen to tumble down from there, we have room all the way down to 300. That's a 3% drop day with not a whole lot that's in between to come back down, to fall back down on. So I think that would be more of a worst case scenario to see in a single day in the NASDAQ. So again, NASDAQ 100, this is the Qs that we're looking at. So we have 1 to 3% on the upside, and settling a little bit down to 306. We have 1 to 3% for the downside as we look at the Qs and its price action throughout the day today. So I'll be interested. I'm super interested to see not only what the Fed has to say, but also what the markets have to do to react to that. And same concerns just for the overall markets as far as Q1 earnings go, and further talk of recession. I think that's that holdout that we have, that really big thing in the summary of economic projections. So let me summarize. 2 o'clock. We could see some volatility as the market opens. We could see it near that 2 o'clock hour. We could definitely see it as 2 o'clock hits and we start to get the Fed rate decision. If we get pause, if we get 25 basis points, I expect 25. Also, we get the summary of economic projections. We can load that up. I'll be posting results of that on the Discord, so it's a little bit more live. And then I'll also be posting on the Patreon about that as well, prior to putting out a video for it on YouTube after the market closes, giving further commentary on what we saw in the market and what we can expect going forward from here. And then also notes on what Jerome Powell has to say and my own take and commentary on that as well. So we'll see what the market brings us today. I think either way, 1 to 3% in the NASDAQ, up or down. And then also for the S&P, as we watch that, we could see a 2 to 3% day there as well. So we'll watch and see what they have for us. I'm very excited about it either way. I got my long positions ready to go. I got my short hedge ready to go. And I think it turns out to a lot of green in my portfolio. And if you guys want to hear more of my commentary and get access to my Patreon exclusives where I post my buys and sells, I also put those out in my private Discord, and I also talk with community members over there. And it's a small community growing quickly, and we'd absolutely love to have you over there. So come on over and join us. Don't forget about that Moo link down in the description. Click the link, sign up, deposit your cash. Do it right away as of the close of this video so that you don't forget. Take advantage of it. Support yourself. You're supporting this channel so I can continue to bring as much quality information as I can to you every day in the markets. Thank you guys for watching this video. Click the like button if you like the video. Hit the subscribe button to subscribe to my channel and ring that notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.